Ladies and gents, hopefully you're not like the paper handers that we need to throw scissors in the comment section for, because we know that when $200 is hanging out with you, but you're taking a look at that cool 20 million, that is the price action that we're actually looking for. So if anybody asks you, here are the questions that you have to ask yourself, right? 1, is the squeeze happened yet? No, not even close. 2, do I think that the stock is going to rip majorly this weekend, and then there's going to be some FUD mixed in with that FOMO from the retail investors not knowing what to do because they don't know what message to listen to? Because if you don't know the answer to that question, number 3 is, how do I get that message out? By pressing the like button and getting this video up to 1,300 likes before the YouTube algorithm crushes it and shadow bans it. So once again, let's see the way. I'm going to talk about your super in a second, but we are going to talk about that price action for GME, especially in the pre-market. We saw a head and shoulders pattern start to emerge, right? This W that would be considered down here 1 and 2, a bullish pattern, if not for the fact that we topped off at the exact same point twice, once right before market open and twice right as market was starting to peter out in terms of the major volume from this morning. Look at that, 16.57 million and climbing. This is huge compared to yesterday, but compared to all of the volume that we've seen in the past few weeks, this already has matched the average volume for a day, and that is only in the first half of the market trading. We're not even close to power hour just yet. But what we'll see after that is passing through major levels of resistance here at 243 and at 237, where the VWAP currently is. That VWAP trended below that price action for GME almost all day, and you'll know that this is one of the factors of having high speed limits here. Basically, very wide ranges between one resistance and the next. So these two levels of resistance and support means that there's going to be large chances for major rips, but also not a ton of support on that price action downward. For instance, we actually have a brand new level of resistance, 2 touch points, but in this crucial time, I'm seeing that these touch points are being created faster and more frequently. At 248.48, we had a double top, which essentially spelled the doom for the short-term price action. We fell off from that 248.48. That is that dreaded M pattern. We see that here. I can draw it in red. Up, down, and from there a 1, 2, 3, 4, 5, 6, 7, 8. I'm starting to squiggle, but this is one of the longest solid consolidations at each level, but undeniable corrective waves that we've seen in a long time. And AMC has followed suit. If you want to see that AMC video, then stay tuned, because that's coming up after the GameStop technical analysis here. Now, what is next? Well, we are passing by 23.6% retracement here, which is a major milestone for bulls and apes on GME's price action. So it's not like GameStop is going to be going anywhere for any time soon. In fact, it already has violently, I would say, in 2 to 5 minutes time, cross back over that 23.6% retracement, which means that it's going to be a solid floor. Look at this ascending level of support here. That gives us a pretty good indicator that once we clear this 23.6% retracement again, that we are going to be on our way up at that bottom floor for the rest of today's price action, which is huge. We were celebrating $200 just yesterday, and now we are celebrating $250, almost in the making, and we are getting real close. One more thing to note is that GameStop has very similar patterns to January squeeze. Last few days pattern mirrored that of the January squeeze. Let me give Maple a treat while I'm pulling this over here. Take a look. We just extrapolate the price action from January squeeze over here, and then move it straight over to our price action from the past few days. So we are not only seeing that price action already start to actualize with double-digit rips from the day before to today, but that means that we are this close, probably 3 or 4 days out from another major rip. You guys better be prepared. Hang on to your hats. One other thing I want you to be able to understand is that GME has a couple of other threats in the making, including married put conversions, which was something that we talked about before, very much giving you the same effect as a short attack or naked shorting, but it's a little more devious because it is affected by you in particular going about and thinking you're supporting a squeeze by buying at the money calls, right? And playing with the options market, if you don't know what to do, will not only burn you, but also the apes trying to go up with you. So this is by Alexander Hood. Give them an upvote. It'll be in the description down below. 'Twas the night before the Moas miss, and if you're too jacked to sleep, I have something to keep you jacked until market opens. So right here, last week on Days of Our Lives buying and holding, we saw about 75,000 irrational puts expire. Poof, gone. Where did they go? What we did not see Monday morning was an additional 75,000 irrational put options get opened up, that's for sure. What we did see yesterday and today was a nice, well-distributed buildup of irrational puts all over the board, spread out like sand on a beach, totally innocuous. So if you guys remember, let me pull up that options chain from the 21st. We have this very, I would say irrational, but you decide, in the money put at $63 million total, right, at $300 strike. That is the largest put wall that we have seen for a long time on GME's price action, and capped there for a good reason. People back here would have been thinking crazy talk to try to say that GME within the next 4 trading days is going to start 40% ripping above its price action. So that's why 300 seemed like overkill. Now that we're already peaking at 250, not so much. However, how can a conversion mess up the same process as being put on the SSR and still ignoring that short sale restriction list here? Naked, 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 pop, pop, pop. They've been watching low strike put options open interest to see how it changes day to day. Here's a comparison from today to yesterday, a snapshot of some irrational puts popping into existence. So check that delta column for much of the changes from the 24th to the 25th, right? So that is 1,700 delta in addition, just from one day's OI to the next day's OI. With GME soaring, the cost of most of these low strike options dropped to super cheap levels. You could pick up puts at even $130 strike for just 23 cents. Looking over distribution of puts at strikes today, we saw widespread increases all the way up to about $130 a strike. So it would seem that whoever programmed the algo to distribute these evenly doesn't want to pay even more than 25 cents per contract. So if the hedgies have a budget of about 25 cents max for married put contracts, let's take a look at the following week's OpEx to see if there is the same pattern of evenly distributed puts added today for low strike options. And if you want to understand the mechanics of how the hedge funds delta hedge, that is just a video that you're going to have to search. Go search how the gamma squeeze works. Andrew Mo, I explained that months ago, and it's pretty it has crayons and colorful drawings for any ape to discover. Yup, we see another 572 delta from the 24th to the 25th in terms of option expiry dates. So we see even more irrational puts added to June 11th OpEx contracts, more added to into hedgy perennial favorite, the July 16th contracts, and a few more in January 21st, 2022 contracts. So what does this all mean? Short interest continues to be hidden in long-term low strike put options as well as low-cost short-term put options. In their previous post, they did an analysis using new criteria for what an irrational put is, a contract for 10 cents or less at high IV. Looking at today's newly minted put contracts, these are getting up to the 25-cent range on the high end, although the majority remain clustered below 10 cents. There are still few being added at even higher ranges, most likely due to some semi-random algorithm trying to hide these puts here without accidentally making it totally obvious that they have some specific allocation. So when you take a look at what threatens our price action moving forward, just understand that these puts are now supposedly flying under your radar. Hopefully you don't notice. Now you have been notified. So if you guys want to say thank you to the DD writer, go ahead. It's in the link in the description down below. And if you want to say thank you to Professor Meatball for making sure that he sleeps, even if the data never sleeps, the most important thing that you guys can do is try to get your 2 free stocks on Webull. Don't even think about transferring your entire portfolio. Remember to diversify. Give yourself access to Webull, because that's another way that you can prevent the hedge fund effery to your portfolio when the squeeze is about to happen. And if you guys have not quite yet, decide right now if you want to be on the moon rocket ship with us to 90,000 subscribers. We're going to do a major giveaway in terms of swag, in terms of rocket ships. Where did my rocket go? Well, I'll find it in a second. And of course, some one-on-one time with me and Professor Meatball. Go ahead and join the Moon Platoon by pressing the join button or the Patreon link in the description to get access to my 6-figure portfolio on SoFi, which is going a reverse IPO next week, which is going to be super exciting. And we'll see you guys in the money.